Welcome back to Trading 360. I'm Nicole Petalides. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the charts. Here to take us through the trades, Alan Knuckman, Chief Market Strategist, bullseyeoption.com. Great to see you both. Alan, some of your market thoughts. We finally got Nvidia. It's the big loser today, at least in the Dow, and dragging on tech. But is there some sort of relief now that it's out and the markets haven't collapsed? I mean, the Dow's up 360 today.
Well, for options traders, it was very disappointing because it was a nothing burger. It was essentially unchanged. In the aftermarket yesterday, we're seeing a little bit of, unwinding, let's just say. But I mean, it did have an amazing recovery after this deep seek. So like I've said before, a lot of times it's more important what doesn't happen as opposed to what does happen. And what didn't happen was that stock is not out. It's not over. It's not the end of Nvidia. And now it just has to, trade through the course. But I think if we can get back up to this 140, we can make a new full V recovery, and we could rally up to 170, 180. Technically, I just trade what I see. And after your last guess, I had to reconfirm that we made all-time forever highs in the Nasdaq and the S&P just last week. So I don't know. I don't know how sentiment has shifted that much mentally, but I just trade what I see. We're still in an uptrend. Yes, we pulled back, and the S&P had a fake breakout, but now we're back inside that 3-month channel, and we'll see what the markets tell us from here.
Yeah, no, we did hit records last week for the S&P
thank you. I
and
just
the
thought
Nasdaq
I'd like to
composite.
hear that.
We were watching the triple Qs, right? I think those were at a record. It wasn't that long ago. It was days. I mean, really, right? It was last week. It was early last week. We saw some closing highs, multiple days in a row. Okay, let's talk about Dow Chemical. Why did this one pop up on your radar? What is it about this name that you're watching?
Well, I was looking at some of the chemical companies and some of this space. And what I'm seeing is some leveraged money accumulation, some money flow going into these stocks. I'm seeing DuPont and Dow, and I like the Dow risk reward a lot better. This is a stock that's down 35% from its March highs less than a year ago, and it's been trading between 40 and 60 for a year. So I'm looking forward to this. Makes a bottom base. We have bullish divergence where it made new lows, but not new highs, and implied volatility here in February. So from a risk-reward standpoint, we're down here at multi-year lows, and I can buy a June option relatively inexpensively, a June 35 call. We're trading at, 39 or something like that. So it's $4 in the money. It's trading for 4.25. So it's a nice position, a probability position to be put in play, looking for this stock to make some recovery as the rest of the market, as you just stated, not just me, the rest of the market is up here at all-time forever high.
All right, understood. I mean, look, I'm looking at this chart here. Let's see what Rick Ducat has to say. Rick.
Certainly a chart that's had some struggles here recently. You can see that we have been trending downward for a while here since around the time shortly before our last earnings event here. You can see that we also have had more of a sideways type movement, a bit more range bound here between roughly 36, 50, 37 or so. And then we had the low point before this gap down just below 41. So a pretty clearly defined range in which we've found price trading recently here. Notice that price has failed to take out this intermediate term length trend line here, sloping downward here, and it's also given up its short-term upward sloping trend line as well as our yellow 21-day exponential moving average. So a bit of a technical damage being done here, heavy volume spikes as well after our last earnings event in which we had a decline. However, RSI still hanging on to this upward sloping trend line here despite sinking below the 50 midline here, so perhaps not all is lost for the bullish crowd here. Notice as well that price is still hanging on to this fairly large volume node all the way down here near 40, 39 or so. If we were to take out those lows, 36.66 is the area to watch. We've also got our -1 standard deviation channel all the way down here just above 33. To the upside, notable areas of potential resistance, another volume node right about here near 44, 45 or so. And then our +1 standard deviation channel comes in near 46.72, Nicole.
Okay, thank you for that. Appreciate it. Look, I mean, this chart, is a little brutal, right? And you saw the lows, but you see these opportunities now, Alan.
Yeah, and for me, it's a bad enough to buy chart using limited risk options. I'm not trying to pick the absolute bottom with shares and just looking for this to make a complete comeback. a modest move off this bottom when people have to take some profit takedown when these unrealized gains can see this stock have a little bit of a bounce and try and break out of this channel. And that's what I'm looking for here. And I'm seeing what I want with that bullish divergence. And that's a very positive sign that the shorts are running out of strength. And I can put down a limited risk position being wrong from that strike price and have plenty of time for good things to happen.
Okay. Next up, Devon Energy got a 55 from 54 overweight rating over at Piper Sandler this week. So some of your thoughts here. There was a lot of talk about mergers and acquisitions in this group, and Devon got thrown around in that conversation. Where do you think this could be headed? Saw that low of 30 in December.
Well, it's the same kind of thing. It's almost the same chart. We've been between 30 and 40 here for 4 months. If it breaks above that 35 level, which it has, then it targets 40, and then a breakout, targets 50. So technically, it's made this bottom base that I look for. Now, the PE on this stock is 7, so it's a very inexpensive stock. The options are very inexpensive as well. So there are a number of factors that make this a very attractive options play. It's not a hero trade. It's just a high probability position. So I'm looking at the June 32.5 call. We're at, 36.5 right now. So it's about $4 in the money again. It's trading for $4.50. So my expiration break even is 50 cents higher. And again, I like where it stands with the money flow and that same bullish divergence. And we've been doing this for a long time, Nicole. This is a technique that I use to identify when the sentiment shifts mathematically, not when I feel it or not when I see it, I see it on the charts based upon that implied volatility change, and the fact that you would think when a stock makes new lows that the volatility would increase, we got to have larger fear. When that doesn't happen, that's a sign of a stall, and you can see those shorts cover their positions.
Yeah, and as you talked about, I mean, you really are right about the options traders on Nvidia. I mean, they thought there was going to be so much volatility, and they just didn't get it. They didn't get it. Let's look at the Devon Energy chart, Rick.
Yeah, that's a good point. It was kind of a disappointment in terms of volatility. And what we're seeing in this chart is one of these situations of low volatility as well that has the potential to turn into a high volatility breakout. And what I mean by that is we have a longer term downward sloping trend line beginning all the way back here at our 52-week highs and connecting the subsequent highs that were formed along the way here. Now notice as well that we have a situation where price broke out above not only its moving averages, which were clustered quite close together, our yellow 21-day and orange 63-day exponential moving averages, and we broke above the trend line. However, we stopped short at this green line here, a period of sideways consolidation here. It was near this notable low point as well. That's about where we topped out a couple times after that, just shy of 39. So now price is struggling to make a convincing move beyond this confluence of resistance at which we find ourselves with more resistance just shortly overhead. Ultimately, beyond that, 43.08 represents another high point there. And we can see as well that we have some notable volume areas to consider as well here. We've got our point of control that lines up very closely with our green line that I mentioned near 39, as well as our +1 standard deviation channel. We can see to the downside another node pretty close at hand near 35. Those would be some noteworthy areas to consider on the road up to those highs near 43, Nicole.
I'm glad you showed that high too, right? That's big news when it happens. Final thought, Alan, and then I want to get to Baidu.
Again, it's all about risk reward. It's about following the plan, and nothing has changed in the marketplace. It's about being selective and finding these diamonds in the rough, so to speak, for stocks that haven't participated. Or if you're going to jump on board trending stocks, do you want to wait for dips, or do you want to just jump on board and see if there's going to be you can ride through the profit taking? These are two different styles of trading, and this is something that I've found comfortable, and I kind of use what I use are lifestyle options that are positions in place with high probability.
So we were looking a lot, thank you for that. We were looking at a lot of the Chinese stocks, right? Alibaba and JD, and a lot of them had been running up. And we saw some bids for this group. Baidu too, but less so, right? Just not the same story, just not as a good story like the others just yet. Okay, tell us more.
Yeah, that's the key is yet. And again, this is proof of concept for the other two trades that I looked at. We had talked China a long time ago, and we've done this trade, I think, 3 times in the last year, where China had cycled up, given back, cycled up, and we used those opportunities because I could see that bullish divergence each time. Alibaba was the most extreme example of that bullish divergence, where it made those lows but not new highs and implied volatility. That was a sign that that stock had been done going down, and guess what? It broke out. Now, Baidu has almost the exact same chart and hasn't participated at the same, velocity, but it's got a great setup. It's been between 80 and 120 for a year, just like Baba was. And in the shorter term, it's been between 80 and 100 for 4 months. So a breakout of that range targets 120. A breakout of that range targets 160. There's a ton of upside. The PE in this is 9. So if you look at the valuations of Baidu and Baba, compare them to the American tech winners, they're in a whole different league as far as risk reward. Is so much more to the bulls' advantage. So I'm looking at an 80 call again. That's the bottom base. The 80 call is trading for about 13. It's $9 in the money. It's a May option because, again, these are a little bit more expensive, so I have to go with less time. But it puts a nice probability chip and be along Baidu from 80. There's a lot of potential. You just mentioned a whole bunch of stocks that have already moved, and the FXI, which is the China ETF, is looking like it wants to break out and make a one-year top break out of that one-year top as well.
Yeah, we'll take a look at that too. Everybody, FXI, look at that.
China.
Yeah, Rick?
Yeah, Baidu was kind of the odd man out in this China frenzy here. It didn't seem to go up as much as the other ones. It hasn't really held on to the gains as well. But nevertheless, a nice move off of these lows here. You can see near 77 was where things bottomed out, and it was only slightly below our previous set of bottoming points that were right about there near 80 or so. And we can see now that we have a situation once again where our moving averages are in a sideways type of price activity here, clustering together. Notice that the yellow 21-day and orange 63-day are very close to each other. What this tells us is either that price is very choppy or price is very sideways here. I think probably it's more of the chop that we're seeing, these zigzagging price swings back and forth here. Now perhaps things are settling down a little bit more as we digest some of this recent activity and look at some key price levels here. But you can see very heavy volume once again recently, so a lot of heavy activity despite the limited range of price movement recently. RSI also not really giving us a clear directional lean at this time either, kind of close to that 50 midline. When we look at the heavy volume areas, we can see our point of control lines up with our confluence of moving averages. So it seems like where we are right now could be a key pivot point, a move to the upside or the downside. Could be the start of a new trend when you move beyond one of these key areas. So around 90 is an important point to watch. Beyond that, we've got our two green lines right here. If you were to go back and look at the chart, it's quite gappy, but these are some important levels, 97 and 100. Then the volume really picks up again near 104. To the downside, our low point. That's the area to watch near 77. That would be the line in the sand, so to speak.
All right, good to watch all those points. Thank you so much, Rick Ducat. Really good to see you. Good charts there. Alan Knuckman, a final quick thought?
Well, I was just going to say, as a bull market genius, it's our job to identify how the markets react once they pull back a little bit and see if it's profit taking. I will be the first to say that last week was a weekly key reversal in both the S&P and the NASDAQ. So it's something to keep an eye on. But all we need to do is make some new highs and it erases all that, and we'll be back to the bull boom once again.
All right, can't wait to see you next time. Thank you so much, Alan Knuckman, bullseyeoption.com, Rick Ducat with us there on the charts. Thank you both very much. A good look at Dow Chemical, Devon, and Baidu.